engagement with Union Bank is truly appreciated. I will also put on record the dedication and resilience of my team, my Unionites, who have made great contribution to the bank and for this quarter's results. Let me begin by providing a brief overview of the broader operating environment. Global economic conditions remain uncertain, with evolving trade dynamics and tariff-related developments across major economies, adding to volatility in financial markets. These factors are likely to weigh on global growth prospects in the near term. On the domestic front, while a slight moderation in the GDP growth trajectory is anticipated in the FY26, key macroeconomic indicators supported by policy interventions continue to underpin the cautious, optimistic outlook of Bharat. The RBI's recent decision to reduce policy rates and shift its stance from neutral to accommodative is both timely and growth supportive. In this context, I would like to share highlights of my bank's performance and the overall operational performance of the bank. Despite the challenges, as I told in the beginning, the bank has demonstrated strong resilience anchored by solid fundamentals, healthy profitability, robust capital adequacy, and sound asset quality. Our strategic focus remains on pursuing sustainable growth and with a calibrated balance between top line expansion and bottom line strength. I'll just give you a brief on the key financial highlights for FY25. Net profit, we have recorded the highest ever annual net profit of 17,987 crore for FY25, reflecting a YOY growth of 32%. In the last 2 years, we have almost what? We have doubled our net profit. Net profit for Q4 25 stood at 4,985 crores, marking a YOY increase of 51%. Operating profit for FY25 stood at 7,700 crore and YOY growth of 18%. For the full year FY25, operating profit reached 31,090 crore, registering 10% YOY growth. Profitability ratios, if you look at, return on assets, that is ROA, improved to 1.35 in Q4 FY25 compared to 0.97 in the same quarter last year, better than the December quarter, that is at 1.3 was the December quarter, so we have improved from the last quarter too. Return on equity increased to 18.34% from 15.12% YOY. Capital adequacy, CAR remains one of the best in the industry at 18.02 with CET1 ratio at 14.98%, comfortably above the regulatory minimum, providing ample headroom for growth. Our sustained efforts in strengthening underwriting standards through centralization, verticalization, and the digitization has yielded consistent improvement in our asset quality. Gross NPA reduced by 116 bips YOY to 3.60%, outperforming our guidance of 4%. Net NPA declined by 40 bips YOY to 0.63%. Provision coverage ratio is at 94.61%, reflecting a well-provisioned balance sheet. Let's talk about the credit costs and slippages. Credit costs stood at 69 bips for Q4 FY25, 66 it was in Q4 FY24. Slippage ratio was contained at 1.13% in Q4 FY25 compared to 1.56 in Q4 FY24. Gross slippages for FY25 stood at 12,073 crore, net slippages around 10,478 crores, and if you remove one of the biggest slippages that happened, my slippage is only about 8,700 crores and much below the guidance that I had given to the market. Now, if you look at recoveries, Gross recoveries are at 14,995 crore, closely aligned with our full term guidance of 16,000 crores. During FY25, gross recovery has surpassed the gross slippage by almost 3,000 crores. With regard to margins, NIM was at 2.91 crore for FY25, within our guided range of 2.8 to 3%. That's what we had given the guidance. NII, net interest income, registered a YOY growth of 1.76%, while a robust 23% growth in non-interest income helped offset the moderate NII growth. And we all know the reason why the NII has also dipped a little. If you look at the business growth and the strategic priorities of the bank, as far as the business growth is concerned, credit growth of the banking industry moderated from over 20% in FY24 to 11% in FY25. Similarly, deposit growth decelerated from 13.5% in FY24 to 10.3% in FY25. In our Q3 post-result interaction, we had guided towards a lower end of the business growth. This was a conscious strategy. We curtailed high-cost deposits mobilization. We limited to 5% YOY growth in FY25 versus what we had done in the last year. We had done a little bit of more fundraising through the bulk deposit, but we moderated it to only 5% during the current year. We also selectively deprioritized low-yielding credit assets. As a result, total deposits grew by 7.2% YOY, and the guidance of, as against the guidance of 9 to 11%. Advances registered 8.6% growth as against the guidance of 11 to 13%. However, if you look at the segments, various segments, current account has grown by 17%, retail term deposits by 8.6%, retail lending by 22%, MSME lending by 12.5% we have grown. With regard to the strategic mix of business, our internal target remains, as we have been talking about, retail to bulk deposit 75 to 25 and RAM to corporate lending to 55 to 45, with adjustments aligned to the evolving market dynamics. Yesterday we had the board. The board of directors has recommended a dividend of 47.5% for the year ended March 31, 2025, subject to the requisite approvals, of course, reflecting our commitment to delivering positive value to our shareholders. We have got another good news, of course, the amalgamation of RRBs effective May 1, 2025. Union Bank has been entrusted with the sponsoring the newly amalgamated Andhra Pradesh Gramina Bank, reflecting trust in our capability and to lead in the rural markets. If you look at the guidance, what I am going to give you, the recent policy rate cut by the Reserve Bank of India is anticipated to exert downward pressure on the bank's NIM in the near term. So I will not be, it's a little volatile and a fluid state, so I should not be able to give any kind of policy guidelines on NIM. Reductions in the policy rate are typically transmitted more swiftly to the repo rate linked loans, whereas adjustments on the deposit side, that is MCLR linked loans, tend to occur with a lag. All of us are aware of that. Looking ahead, it remains challenging to accurately assess the future rate conditions by the RBI, given the prevailing market volatility and the evolving macroeconomic conditions. In view of the above, we believe it is prudent to closely monitor developments in the immediate term and provide calibrated guidance on business performance and profitability at an appropriate juncture. In conclusion, I can only tell you that we as Union Bank remain firmly committed to building a resilient balance sheet and delivering sustainable growth across core verticals. Our focus strategy anchored on centralization, verticalization and digital transformation is, we have seen that is yielding results. As always, we continue to prioritize profitability and prudent growth rather than chasing top-line expansion at the cost of bottom line. Before I conclude, I would like to emphasize that Union Bank of India is fully equipped to handle any cyber threat that we may have, and we have taken proactive, multi-layered defense strategy, and we are continuously monitoring all our strategies. The bank operates a state-of-art cybersecurity center of excellence in Hyderabad and a 24/7 cybersecurity operations center also, enabling real-time oversight and response to any kind of threats in our digital channels. Comprehensive awareness programs have been conducted to educate both staff and customer, ensuring cyber preparedness and resilience at every level. Thank you, and I'm ready. All of us are here ready for any questions from your end. Thank you very much.
Can you give the credit and deposit target for this year?
Sir, that's what, as Madam has told, we have from board approved, we have it. Only thing is, we are just again recalibrating with the present situation, macro situations, what is happening. We will be coming out with other things once we get the clarity on that.
My second question is related to the books which bank purchased of former CEA. So you, in the exchanges, you said there were some lapses.
Excuse me, sir. Today's interaction is focused on the bank's quarterly results. For any other query, you can please email us and we'll address those.
I just wanted to understand, you said...
So we will not be addressing any queries other than the quarterly results for this.
There was an increase in NPA in Jan-March quarter. So where is that stress coming from? And your recoveries have also fallen as against last year. So what is your outlook for that?
See, if you look at the recovery, these slippages has happened mostly in the agriculture sector, and recovery has come from the OTS. We have seen about 4,14,000 accounts have been recovered to the tune of about 4,000 crores. And these are the major things. And the DRT also we have got about 4,500 crores. And from the sale through Sarfasi, we have received about 2,800 crores. That is how we have come. But the slippages mostly has happened in the agri direction.
One more thing, your treasury income has doubled from last year. So what is your outlook for the treasury income seeing the current rates and
Yeah, my treasury department is quite optimistic about the growth in the current quarter too. But we'll have to look at the macroeconomic scenario also and the way things are panning out. So we cannot definitely not say that what is going to happen. But they are very positive, and we should be making some good numbers too.
Ma'am, in your closing remark, you said about the cyber threat and cyber preparedness. So it was a general remark, or in lieu of the...
Yeah, see, I can tell you that, digital is a very important portfolio for us, and we are taking all measures. And, in view of the things that's happening around us, also we have now very clearly said that, we are taking all precautions with regard to the digital initiatives and the cybersecurity area.
Has there been any specific directive from DFS with regard
No, they have just asked us to be, this comes to us on a regular basis that cybersecurity is important and we need to take care of all the cybersecurity angles needs to be covered by us.
any other directive with regards
Nothing specific on the cybersecurity. Only thing is,
to not cybersecurity, other banking related operations?
no, they have just told us like, your cash in the ATMs and cash at the branches, you need to keep all these things. The economy has to keep going, but those are the things as general, as customer service needs to be taken care. That is what the DFS has also talked about to us.
Are you loading up more cash?
No, ma'am. As per whatever is the requirement and whatever is the need, that is what we have done. See, we have a very calibrated approach to how the ATMs have to be loaded. If it is a holiday time or if it is, season where there are festivities, so we load the amount. Otherwise, we have a very good system in place which actually predicts what would be the cash payments from the ATM, and accordingly it is loaded.
You've not seen a spike yet in the last.
Absolutely not.
Connected to that, how much would the border states contribute to your business, and are you taking
bank, are you taking any
We do have, border states, how much of business I cannot immediately give you because I have got, centers in I'm a pan-India bank, so there are branches across the country. But I cannot immediately give you, I can specifically afterwards we can give them the reply of course. But we have told them to be very cautious and, take proactive steps wherever necessary as guided by the SLBC in those states.
is pertaining to margins? Just one last problem. Pertaining to margins, we did see the bank come out of the 2% range, but once again on a full year basis, we're closing at around 2.8. I know you're saying that it's a fluid state. It's too early to give any commentary on margins, but the expectation is that we might see another 50 basis points.
Absolutely right.
In that case, how much do you believe that the bank has as a bandwidth to transmit, particularly on the deposits?
Ma'am, we have got about 44% of my assets in the MCLR section, and the about 24-25% is in the repo linked rates. So the transmission will happen immediately on this 29% of the portfolio, and the 44% it will happen on the this one. Now, if you look at my whole portfolio, about 2,96,000 crores is in a one year MCLR kind of a reset. So that will happen after a year's lag. The others will be immediately 3 months, 6 months kind of a thing. Whenever it's coming for reset, it will happen.
So would it be safe to assume that 3% NIM is a little difficult in FY?
See, we have told you in the previous year, this one itself, my guidance itself was about 2.8 to 3. Last year itself I did. But with the falling, repo rate scenario, naturally the margins will be coming under pressure. But we will keep our, my unionites will see that we keep improving the NIMs and the margins. As I told you, profitability is something that we are always looking at. So that we will be looking at. Yes, ma'am.
Ma'am, I wanted to ask, is the senior management being investigated, for the books case?
Like we said, we are not addressing any queries apart from the quarterly results, so please email us.
Hi ma'am. Ma'am, your education loan portfolio has seen very muted growth. Is there anything from the demand side, and how is the bank looking at lending?
See, if you look at, my portfolio of education loan was very small, maybe in 22, 23, it was a very small book. We did grow, whatever little, we were at 7,500, we grew to 11,500 crores. So it was, it was from 7,500 crores was the portfolio, it grew to about 11,000 crores, that's a number. After that, once the base is very small, so it looked very big. Now that we have come to a certain level, we have, as aggressive as ever in the education loan portfolio. And now all the education loan has to flow through the Vidya Lakshmi portal, which is a portal, which has been designed by the government. So the whatever portfolio comes to the bank has to flow through the Vidya Lakshmi portal.
Hi ma'am, Manish Suvarna here from Money Control. Ma'am, how much is your repo link portfolio? Is it 25% or 29%?
You're talking about my repo linked. It's about 29%.
29%, okay. And Miss, my question is on your CASA percent in the domestic deposit. So it has gone down 68 basis point on a yearly basis. So given the persistent stress in the CASA deposits, can we see further moderation in your CASA share?
Sir, if you look at CASA has always been in the bank, last year also I addressed this question. Always my CASA ratio is in the range of 33.5 to 35%. That's a range that we have always been there. Not like other banks where it is about 40 or 50%. We have moderately grown in that sector, and as you've seen in the industry as such, CASA is being moderated across the industry. It's not just for Union Bank alone. It's been happening across this place. And we have seen a good growth in the current account. I have also said in my opening remarks about 17% growth and about 3.5% growth in my SA balances also. So there is steady growth in this. We have taken a lot of steps with regard to growth in CASA. Like we have put up premium RUSU branches. We have taken up about 1,500 and odd relationship managers to help in the increase in CASA. There are a lot of structured strategies that the bank is taking. to see that we grow not only in the new to bank customers but also in the existing bank customers. We've also found that some of our existing bank customers were leaving the bank, and there also we have put the relationship bankers and relationship managers, and we have been able to bring back those deposits back into the bank. So there are structured strategies, and we are sure that we will be improving on our CASA deposits.
And if you look at quarter on quarter, we've actually shown an increase of 9 basis, so you could see that.
Basically, you are comfortable with 33 to 35% share of the.
So historically, my numbers were like that. That's what I'm not saying that I'm comfortable. I'm not comfortable with any numbers. I would always look at a higher growth numbers. That's where the comfort comes from. But historically, my bank is about 33.5 to 35%. That's the way it has been growing. And I would be, the kind of dedication and hard work my people are putting in, I'm sure that one fine day we will be growing out of the 35% bracket. Yes, sir. Yes, sir.
This is about your recoveries. I can understand that you are not giving guidance for the growth of the deposit and advances, but this is something which is a carryover aspect. Here you can give some kind of guidance in terms of the
For the recovery.
looking for.
Ravindra Babu, can you give?
We don't want to give any guidance, but we're quite comfortable in terms of the recovery stream over the next 2 years. So we're quite comfortable as far as that is concerned. But like we said earlier, we're not looking at giving any guidance. We evaluate as the year goes by. If required, we give a guidance. But we're quite comfortable.
So, but we have got a very good book of, I can say, very good book of 1.2 lakh crores of NPAs with us, and I'm sure that we will be able to recover the kind of numbers that we have been able to recover till now. And we'll hope and see, sir, that we better those numbers again.
How much you have written off in FY25?
Written off about 11,000 crores, sir.
And you spoke also about quarter 4, certain uptick in the agricultural loan.
Yes, sir.
Pages.
Yes, sir.
Generally, it is seen that the second quarter and the fourth quarter see the.
Yes, sir. Actually, your Jan to March quarter is a very, very lull quarter in the agriculture sector because harvesting usually happens and nobody comes to take loans. So all this will happen now. Your, the Kharif and the Rabi seasons will start, and then you will have lot of KCC and other farmers coming in for loan. So that is a time usually we see the lull in the agriculture sector in that quarter, and then it goes up in the remaining quarters, sir.
In terms of the MCLR part, you said
About 49%.
44.
44%. Yes, sir.
how much of reprice, how much it will get reset?
All of them, sir. MCLR is always getting reset. I told you also, out of that, almost out of my MCLR portfolio, 2,96,000 crores is, a 1 year MCLR. So it will get reset in a year's time.
Sir, I can give a little more details. In the MCLR, 67% of our MCLR portfolio is linked to 1 year MCLR.
1 year MCLR.
Remaining are with different tenors.
Given the soft lending rates that we are seeing, how much of further dip in the MCLR rate because it comes with a slightly lag? How much exactly you expect?
I didn't get your question, sir.
No, how much reduction?
Generally, the soft transmission happens with a lag. So
Yeah.
which you are expecting, given a 50 basis point and expected 50 basis point.
About 5 to 10 basis points, sir.
I mean, your India First, you have reduced your stake, but in Sud Life, still you have 26% stake. So, any
Sir.
plans of value unlocking? Because we are seeing that other PSU banks are.
We have not yet, looked at it. If my profitability is at a problem, then I will start looking at, those kind of things. But I'm comfortable in my present structure right now, and we have reduced in, India First because I cannot be, having two insurance companies as per the IRDA guidelines. With my Sud, I'm fine with my whatever stake that I am having right now.
No plans of increasing or.
Not to the current, we have not discussed about it, sir.
And why did your CD ratio come down during this quarter? I think it was 80% in the December quarter.
No.
Now it has come
It
down
was 79%, right?
Any particular
Yeah.
reason for that?
No. This all depending on various. We have to look at the our maturity profiles also, and the growth in the credit, what we were expecting and what we are doing it on that. So basing on that, we have taken some this one. See, in December quarter, we have completely reduced our bulk deposit. We reduced our, we squeezed our liquidity to the maximum level, and we are done. Because we find that when the rate cuts is happening, So we also will be taking a call on that actually. So it is a dynamic situation. That's what the last time also I told. One quarter we may be increasing in the CD ratio. Next quarter we will try to moderate because we will be always comfortable with the CD ratio of around 75 to 77.
So in my opening remark also I told, sir, we have let go low yielding advances also. In my opening remark I have talked about it. So, it is, if I don't get the right kind of advance and I have to protect my NIM and profitability, I have not gone for those advances, sir.
Largely on the corporate side or a mix of corporate?
Mainly
No,
corporate.
mainly corporate. The others I have to do that, and we do those. MSME and agri and retail are growing in good numbers. It's where I don't get my yield, and when my NIM is at stake, we just give up.
So the fine pricing in corporate is not easing even
No.
now.
No, absolutely not.
So you said spoke about letting go of bulk deposits during the quarter. Can
Not
you
this
Not-
quarter,
not this
sir.
quarter,
In
last
December, we had let go of almost 30,000 crores. And if you look at in this quarter, I have raised bulk deposits only to the extent of about, if you see the growth in bulk deposits is only 5% rather than 22% in the last year, YOY. So we have, taken a very prudent decision not to go for bulk, building our deposit base and our advances base with, proper, numbers and not by just doing bulk.
Ma'am, one more thing,
Yeah, please.
cost to income ratio has increased.
During the quarter, sir, it has increased because of various reasons, like we had made some, yeah.
So the cost to income ratio, there's a slight, upward blip in the fourth quarter. That's because some of the HR related accruals were made in that in this
I
quarter.
can't hear you.
Some
No.
of the HR related accruals were made in the last quarter. Also, some of our CSR spends were in the last quarter. That's why you can see an increase in the fourth quarter. But if you look at year on year,
It has come down.
Ratios come down.
So we have to make provisions for the HR portfolio, of course. So that is the one that we had done. Yes, sir. Yes, ma'am.
Now we've seen the RBI flooding the system with
Liquidity.
Do you see deposit rates come down this month? And secondly, yeah.
Deposit rates coming down is a decision that the banks have to make. It's nothing to do with what RBI stand is. Now banks are all under pressure with regard to bringing in deposits. So it's a conscious call that the bank has to take, whether I reduce my deposit rate and then bring how do I play out. It is something like all the banks have to take a decisions with regard to that. It's nothing to do with the RBI bringing in more liquidity. Liquidity part, if I talk, the bank has also got enough liquidity. We have got about 60,000 crores of excess SLR with us, and that would be okay with us.
What would determine these rates come down?
My advances rates is also to my coming out, as I already said, the fine pricing is happening there also. So I have to look at this again. Of course, liquidity, whatever you say, they are flushing us with funds, the economy, but there would be a little bit of pressure on the way that deposits are taken.
And my second question is on this clip of slippages. Last two financial years, we've seen an addition of 11,000 crores of fresh slippages. When do you see this clip coming down, this trend coming down?
Ma'am, if you look at my portfolio of almost like 10,000 crores of advances, we are recovering. If I look at this, just about 8,000 crores. My slippage ratio is just about 1.3 to something like that, isn't it?
1.1.
1.1%. So I don't see that it will come down. But we are taking various measures, various strategies to see that. See, underwriting has improved. It was very high a few years back. So, but then it was almost like 2.5%, 3%. Now I brought it down to 1.13%. So it will keep coming down. We have improved our underwriting standards. We have improved on our monitoring standards of the loans. So we hope that it keeps coming down. I have done only 8,700 crore except for the large slippage that has happened during the current year.
How is the progress of your super app Vyom? Are you also planning to have a separate entity for the ground?
So, YOM, we have got about 3.7 crore registrations as of now. And we are also coming with the next version of YOM, probably by, in another few months, about 3 or 4 months, we should be coming out with upgraded version of YOM. And it is doing very well. The YOM is doing well. We have seen a lot of, transactions happening on that, new clientele coming up on that. And it's doing perfectly well, sir.
Ma'am, 3 years back when you took over, you said that you wanted to be among the top 3 public sector banks.
Yes, sir. I
In terms
wanted
of
to
all
be.
the financial-
No, on the profitability side.
Yeah. So
Yeah.
how have you achieved those?
Today, if I look at only, if you take out SBI, I am on the third position.
Okay.
So we are inching towards the second, sir.
Yeah.
Yeah.
You've also mentioned about a 6,000 crore of equity plan.
We did not raise, ma'am, during the year.
In
In the last quarter, yes, we had planned, the last financial, we had planned for, increase, but we did not find it, prudent to raise. So as and when we need it, we'll go back again to the board and raise if we want to.
FY26 fundraise plan as such.
It's not there, ma'am. Right now, it's
No,
not
we
there.
have to go to the board for the capital plan. See, we have a very strong capital adequacy ratio, it's 18.02%, right? So there's really, at this point in time, no need to raise fresh equity. We'll go back to the board on our capital plan for the year and then we'll, announce it to the exchanges.
The treasury income has been strong this quarter. I think there's been some reversal.
Not a reversal.
There's a write back as far as the government-backed secretary receipts are concerned. That's about 787 crores. That's right.
That is for all banks. Everyone has got that SR right backs.
On the deposit side, madam, how much of repricing the entire current portfolio will get?
All of them will come for repricing, no? Or your term retail term deposit will come for repricing.
What is the time frame in which the recent?
Over a period of time, 1 year time, it will come for repricing.
Per quarter it will.
Yeah, almost 20% per quarter it will come for repricing, sir. My retail book is about how much?
Around 5 lakh.
5 lakh crores.
Ma'am, with respect to one of the loan accounts, which is once again back from the IBC thing, you also have a reasonable amount of exposure there. PNB, which is the lead in the COC, said that.
Ma'am, about that account, we know as much as you know, ma'am. We do not have any further clarity.
Good thing to hear, ma'am. You should-
No, but we don't have any clarity because nothing has come. It just.
As part of the COC.
No, it has not happened. Nothing has happened right now. We were just waiting for the better clarity on that subject, and then we can tell you on those things.
But don't you think you get a better valuation if it goes to equity?
We can't tell
We
anything.
can't-
on
We
it.
can't actually
Okay.
comment on specific accounts, right? So, but I mean, fair to say that there are discussions going on. You'll hear it at the same time as we do.
What was the growth in corporate loan book?
About 7.2%.
How are you seeing it this year?
Sorry, it was about 8.6% last year. 7.6%.
No, you are trying about domestic. Total corporate and others, it is around 10% actually growth was there. Sir, yeah, this year also we will be finding it difficult. The problem is corporate book we can get it, sir, but the problem is on the pricing.
Finding.
What is the pricing we will be able to do that. That only we have to make a choice on that.
So we have got about 63,000 crores actually under pending for disbursement and sanction, and and 26,000 have been already sanctioned. It's again, as I told you in the very beginning, that it's all about pricing. As ED has also said, it's all about pricing. Get the right price, and we will go for it.
Any kind of stress you're seeing in a retail book going ahead in the fund?
So retail book, we have changed our underwriting standards. We have made RLPs who do only retail lending. Processing is not done at the branch level. It is all done at the retail lending points. And we have got marketing officers and people who do the pick the right kind of this one. And if you can see, if it is in our presentation that 700 and below are only about, I think, 2%. 0.2% in my retail bureau scores. So all my, rather we can say that 99.08% is about 700 and above score.
So we have a we have an analyst call in the next 10 minutes, so maybe we can take just one last question.
I wanted to ask on corporate loans. You said this year also you expect some challenges on the pricing.
Yeah, only on the pricing.
Yes, but do you expect corporate deleveraging to continue this year as well? Are you seeing, corporates prepaying their dues given there's so much uncertainty?
It can happen, but it is too early actually speaking. Whatever it is happening now is very, very dynamic and too early to predict it. Maybe after some time we will be able to get the clarity on that. That is the reason why we are also saying that we will be again look at all the things and we will be coming back with what is the growth path we expect from the system.
So, with that, we'll end this press conference. Thank you, as always, for your support. I look forward to seeing you at the next.
Thank you very much, all of you.
Thank you.